Let's bring in someone far smarter than I am about all of this, the great Hardika Singh. She is economic strategist at Fundstrat. Happy New Year and thanks for being here.
Happy New Year, how's it going?
Well, it's much better now that you're here, and we're here for a new year. Investors feel pretty good about where things are, but we missed a Santa Claus rally. Is this a big deal or something you've been tracking?
No, not at all. Santa unfortunately didn't come to town, but it doesn't mean the end of the world. We still have the January Barometer to keep an eye out for. Of course, in the grand scheme of things, these 1 month performances, they don't really matter all that much, right? But it is nice to see when these things happen because it's one of the first meaningful tests for the stock market. So if they do go up, it reaffirms this bull run that we've had, especially coming off the back of 3 years of back-to-back blockbuster gains, right?
Let's talk a bit more about the January Barometer. Historically, it basically goes as January goes, so too goes the S&P 500. Not a one-for-one perfect correlation historically, but what are you looking for in the first 4 weeks of the trading year to give you some sense on the risk-on appetite for investors for the rest of this year?
I think we really have to see Magnificent 7 stocks here start to rally a little bit. Last year, Mag 7 became the Lag 7, right? It was more Palantir, more AMDs, more Oracles, and even Corby's, which aren't really all that good companies, right? They were rallying a lot more. And I think that if the Mag 7 can turn around here, it would sort of reaffirm, again, things for the bull run because they have really high free cash flow, they have really strong fortresses of balance sheets. So we need to see them kind of deliver on this AI promise over the past, that they've been like telling us all about for the past few years.
Hardika, what are you and the team at Fundstrat watching with regards to this weekend's military intervention into Venezuela? Is there some underlying geopolitical tension that investors in equity should be paying attention to as we move forward with the month of January?
Well, despite all the chaos of the weekend, we saw stocks rally for the second trading day of the year, which is huge, right? And I think it's really because of the past 5 years, investors have been trained to just sell the rumor and buy the invasion, given what happened with Russia, Ukraine, and all the Middle East tensions. So I think it doesn't really matter all that much here because we've seen in the past, these geopolitical tensions, they don't have a long-lasting impact on the stock market.
Now that we've got, for the most part here, I guess unfortunately the holiday season is done. I know that because the Christmas trees are coming down, everyone's taking down their lights. What do we see in terms of the strength of the consumer, specifically for Q4, the heart of the holiday shopping season, where maybe people had been sort of saving to spend more of that discretionary income? Was it a strong season overall, you think?
It was a very strong spending season. Now the big question is, what's fueling all this spending? And according to the GDP report, it seems like a lot of consumers are pulling money out of savings to pump up, their spending and vis-a-vis the economy. According to the GDP report, we saw that savings rate as a percent of disposable income grew at a 4.2% annual rate from July through September, which is the lowest growth since the fourth quarter of 2022. Now, flashback to what was happening then was people had their savings built up from the pandemic, and then as the bear market happened and the job market became a little bit more difficult, people started to chisel away at those savings, and that became difficult. So I think we really need to see consumers have strong balance sheets here to continue to pump up the spending.
Hardika Singh is economic strategist at Fundstrat, kicking off our broadcast here for the first Monday of 2026. Thanks for being here. Good to have you as always.
Thank you.